Thank you, Huw, for joining us, and welcome all to the second session for the Open Banking series that Twimbit is conducting on. As we have spoken earlier, this series primarily tries to understand that what is open banking, what and how the regions across the globe are actually progressing in it. So today we have Huw with us, and Huw has more than 20 years of experience in this domain, and who has worked with banks like Barclays and has worked with MasterCard, has also worked with a fintech like Token, and now is the co-founder of Ozone Financial Technology. So welcome you. Thank you so much for joining us, and we would like to know a brief about you in detail, and also what the company does and what is the aim with which Ozone is founded.
Yeah, sure. Thanks, Minakshi. Great to be here. So yeah, I'm Huw Davies. So I'm co-founder at Ozone API, and what we do is we focus on trying to help banks deliver great standards-based open APIs. I guess a bit of background to the company. We were all involved in developing the open banking market in the UK. So myself and my co-founders were part of the open banking implementation entity. I led the development of the ecosystem. My other co-founding partners led the development of the open banking standards and technical author for the open banking standards. So we've been at this right from the very beginning. And one of the things we saw was that banks were finding it really hard actually to deliver good standards-based APIs. It was taking longer than they expected, costing more than they expected, and also not necessarily delivering perfectly in line with the standards at all times. So what we did was we built a solution to help, and we started by delivering the sandbox for the open banking implementation entity in the UK, and we continue to build and help banks deliver great standards-based APIs. As you mentioned, I spent all my career in the world of banking, so ran a number of different card and payments and country businesses at Barclays, a bit of time leading digital payments at MasterCard. I was global head of payments at HSBC for the retail bank, and then I've been sort of at the forefront of this open banking space for the last 4 years or so, which has been great.
Yes. So yeah, again, it's a pleasure to have you. And as we discussed right now, we see that there are a lot of digital growth happening all around the banking area, right? The digital first model has come, and a lot of digitization and digitalization also happening. And one of the other wave is this open banking. So what do you think that open banking is actually going to contribute or poised to change the relationship that consumers have with banking, or banks have in the whole ecosystem, and for that matter, the whole financial ecosystem as well?
Yeah, it's a good question. So as we mentioned, I've been in this banking industry for quite a few years now, and I can say without doubt, this is the biggest change I've seen in the industry in my lifetime. I genuinely think open banking, and there are many definitions of what that actually is and what it means, but I think it's massively transformational. I mean, for many years, banks have been designed to be closed vaults. Customers can only access them through channels that the bank owns. It's a kind of real vertical supply chain. Banks do everything. They have the license, they develop the products, they own the access channels, whether that's branches or mobile apps. And in this world of open banking, all of a sudden they're having to create an open interface to allow other businesses to connect and access a customer's financial information or to move money on their behalf. That's a huge change to the way the model works. And I mean, banks have always had partnerships with third parties, but they're usually backed by contracts that take a long time to negotiate, with a whole bunch of liabilities and warranty considerations. And yeah, open banking is requiring, sometimes driven by regulation, sometimes actually it's more driven by commercial opportunity, but for banks to open up access to their systems to the outside world. So yeah, it's a huge change. But I mean, banking is probably an industry where this change has come a lot later than in many other industries. I mean, at Amazon in 2002, Jeff Bezos issued his famous API mandate email, where kind of real shift in the business's approach. They said, from this point forward, everything we build must be externalizable, if that's even a word. But it must be accessible for others to build on top of, and that can be hugely transformational for a business, and it has been for many businesses, Amazon and Google and many kind of day-to-day companies that we know and use. Their whole propositions and platforms are based on services that others can build on top of by using APIs. So I think it's been a long time coming for banking, but it's a big change. I guess in terms of what does this mean for consumers, for the ecosystem, for the economy, I think it's a huge opportunity for all. I think it does mean for consumers, or rather than consumers, for end customers, whether that's consumers, small businesses, corporates, I think it's a real opportunity. So in many markets, you don't have, and where open banking is being driven by regulation, it's often because regulators feel there hasn't been enough competition or innovation. Actually, this is going to create an opportunity for far more choice around how they manage their money, how they get involved in day-to-day commerce. We're seeing actually huge amounts of, so markets like the UK, where it's about 2.5 years into the open banking journey now, there's a huge amount of innovation that's happened, and ultimately the beneficiaries are the end customers. So right now there's, I don't know the exact number, but there's well over sort of 200, probably close to 250 live authorized participants in the open banking ecosystem. That's banks and that's third parties. But actually that masks a huge number of other businesses and propositions that are built on top of those authorized players, because it's a regulated, authorized market. So what we're seeing, there are hundreds and hundreds of new propositions in the market. Some of them doing the same things customers do today, looking at how they manage their money and how they see all of their accounts and make sure they've got the right money in the right place at the right time. And some of them that are delivering sort of new products or services. But there's a huge amount of businesses that are delivering propositions based on open banking. These aren't just small fintechs. This ranges from small new challenges to some of the biggest payments companies, the biggest retailers, the biggest loyalty platforms, the banks themselves, all looking to compete. So this is creating more choice for customers, huge array of use cases, whether that's, as I say, seeing all of your accounts in one place to manage your money more effectively, helping people access credit in new ways. Lots of customers are locked out of the traditional banking model because they don't have established credit histories. This starts to change that. So it's a route to financial inclusion. It's a route to help businesses manage their money more effectively. So huge amount of innovation, and all of this is having to make everyone work harder for the customer. So for everyone else in the ecosystem, it's almost a shot in the arm to innovate more. For the banks, for all these third parties that are evolving. And we're seeing the same elsewhere around the world, which we'll talk about. But for banks as well, I think this is a huge opportunity. So in that vertical supply chain world that I talked about, the only way banks really had to get to customers was through their own channels and through their own brands. And we know that bank brands don't resonate with every single customer. We also know that bank channels aren't necessarily the right ones for every single customer. So if banks deliver great APIs on top of their products, it allows their products and services to get embedded in far more places and become accessible to far more customers. I mean, if you look at, again, Google Maps as an example, it's a great product made available through a great API, and hundreds of different businesses build their platforms on top of that. Whether you're getting an Uber or ordering a takeaway or tracking your exercise, they're all based on a common platform. It allows that platform to be far more pervasive than if they tried to do it all through their own channels. And that's the opportunity that's there for banks right now. So I think it's the biggest change in the industry and a huge opportunity for banks.
Right. Basically democratizing banking. I mean, there are some challenges that we found that is very common among banks of all the region. That's how do you reach your customer? How do you increase your attach rate or pervasiveness? That's what we are talking about, because we end up either opening 1 or 2 accounts, some investments and savings, etc. Right? But banking shouldn't stop there. So exactly. No, you're right. I've been in banking for many years, and in the big banks, the conversation was all around how do you get banking primacy, the primary banking relationship, and do more and more with customers. Actually, open banking creates a great opportunity for banks to do that better, because they can help their customers see everything in their world. They don't have to provide every product, build every product and service. They can help customers see their whole financial portfolio in their app. So it can absolutely help banks establish and maintain that banking primacy. Similarly, for those that have got a fantastic product in a particular area and maybe don't have that primary banking relationship, then making that available through APIs allows them to get their best-in-class products out to far more people without having to do all of that through their own channels. So as I say, I think it's a huge opportunity for banks if it's done well, if it's done well. Yeah. I think one of the interesting things that you said is that open banking is generally done either through a regulatory way. We have seen markets like UK, Europe, actually following PSD2 and then having individual bodies incorporating these policies and making sure that banks follow it. On the other hand, you have markets like US where open banking is not even a particular term which is thought of as such. Whereas you have banks like Citibank and JP Morgan doing fantastic work and using APIs to even go beyond only consumer banking, but also to your corporate banking. And again, similarly, China, no open banking regulation as such, but doing fantastic work. And we all know, we always look up to China when it comes to, using any technology to advance on these fronts. So, when you look at both of these approaches, which have really worked well, or why do you think, different markets are adopting different approaches? And if at all, there is a different outcome from each one?
Yeah, it is interesting because it's playing out in different ways around the world. I actually think where we'll end up is a kind of a meeting in the middle of these various different approaches. But we'll perhaps come back to that in a moment. So yeah, you're right. There are a number of markets which are being driven first from a regulatory perspective. So. Actually, one of the more extreme examples is the UK, where the Competition and Markets Authority required the 9 largest banks not just to implement open APIs, open interfaces, but they required them to fund an implementation entity, work together to create a common standard, put in place some central services and infrastructure to help the market, a directory and services like that. So a strong regulatory drive with a strong coordinated implementation. And actually, I think that's put the UK in a very strong position. It's quite a bit ahead of the rest of Europe in terms of the maturity of the market. But it was a very particular way of forming the market. Almost at the other end of the spectrum, as you say, the markets like China were arguably the biggest open banking market in the world. It hasn't been driven by regulation. It's been driven by innovation and consumer demand. Consumers want to access things through the super apps, the the WeChats and platforms like Alibaba and Alipay. Therefore, the world of banking has had to move and become accessible through those players. Very, very different approach. I think what we're seeing then is many of the other markets now are starting to look at some form of hybrid. So, I mean, Singapore, again, a great example of market that was forming really around commercial drivers, with banks like DBS creating great developer environments with APIs supporting trade finance and a whole series of corporate use cases through to, well, huge range of APIs. And then the monetary authority looking to create a framework to try and drive a more interoperable approach across the market, but sort of following and supporting rather than using a big regulatory stick. You've got obviously in India, UPI has driven a huge change. And again, it isn't called open banking in the same way as we use the term in the UK, but it absolutely is. And I mean, we're seeing now with UPI regularly more than 1 billion payments a month going through the UPI platform. So huge, and that's within 4 years. So huge transformation, very successful, clearly delivering a lot of value for end users. I've been really interested to see how it's starting to play out in the Americas at the moment as well. So you've got Brazil are taking a really interesting approach. So the regulation in Brazil has recently been announced. The banks are now into sort of implementation planning mode, and there's a real nice mix of learnings that I think the Central Bank of Brazil have taken. It's a really thoughtful approach to the market, and we're fortunate to be working with some great partners in the Brazilian market to try and help the banks deliver great APIs as the regulation rolls out. But what's happening is so there are some phases. So the overall scope is much broader than many other markets. So it will be a complete open finance scope. So every single financial service product, whether it's current accounts through to mortgages, investments, pensions, insurance, but it's coming in phases. So we'll have a phase, an initial simple phase with sort of information APIs, but then account information, then payment initiation, and then the complete open finance scope. But the thing that's really interesting is there's a principle of reciprocity being introduced. So the largest banks have to deliver APIs and comply, but then that really long tail of other financial services organizations, if they want to connect to the APIs of the big banks, they also have to deliver their own APIs. So there's a real incentive for the whole market to form, but in a way that isn't requiring the regulator to wield a big stick to every single financial services player. There's more optionality. And similarly in Mexico, again, there's a lot more space being created for the commercialization of some of those APIs. Because again, to incentivize banks to do this really, really well, it needs to be more than just regulation. It needs to become a core part of a bank's business model. Again, like Google Maps, if banks can expose great products through really good standards-based APIs, that should help them grow their business, acquire new customers, lend more, and potentially monetize some of their assets. And then, as I say, you mentioned the US. So definitely a commercially driven market, but there's increasingly a move towards standards, which I think will be very helpful. So with FDX driving a really strong standard for the market and starting to gain some real traction. But what I said at the beginning, I think these will all meet in the middle at some point. So those markets that are starting with a real regulatory push, the second phase, almost open banking 2.0, will be the banks then delivering commercial APIs and commercial frameworks on top of that regulatory foundation. We're starting to see that in markets like the UK. It's still early days, but we're starting to see it. And building on a base of standards, but then commercializing and adding more functionality, I think will be a great platform for banks to deliver a return on that initial investment. The markets that have started more with a commercially driven approach, I expect over time there will be much more of a drive towards open standards. So rather than proprietary APIs, it's the only way to drive interoperability. If you're a big third party, you don't want to have to integrate in a different way to every bank. So I think we'll see a drive more towards standards in the commercially driven market and a drive more towards a commercial layer in the regulatory driven market. How long that takes, when it all starts to look similar, that's a totally different question. And yeah, I have no crystal ball that answers that one, but I'm fairly sure that that's the direction that we'll start to see over time.
Right. But then, even regulations, I don't know if that is regulation which has seized this, but yesterday we came to know that in Brazil, WhatsApp has been, asked not to operate anymore as such, do the business, because it is hurting the competition. So do you think that it's just a space where the regulator should be playing? Because we understand WhatsApp would have far-reaching advantage when it comes to ease and access and usability. Everybody uses WhatsApp, and of course it does hamper competition. Agreed. It's like basically using your habit to monetize it, right? So this is something which came to my mind. That is this where the regulation?
Wow, man, that's a tough question. So I'm no competition lawyer. I am merely an interested observer within this market. It was really interesting. I think what happened in Brazil. I saw like I'm sure you did. The minute it came out, I got on Facebook. I got the Mark Zuckerberg update that this was happening, and that's interesting. I started sharing it with a few people. I saw LinkedIn going nuts with people sharing. Look at what's happening. And then within days, the news came out that you just mentioned that it's not happening anymore. I don't have any views on that specific case. I don't understand the detail behind the decisions. However, so I think naturally you get some competing forces here. We talked about India actually. One of the biggest drivers of uptake around UPI was when Google Pay entered the market. So there were various different wallets, and uptake was picking up, but Google Pay arrived and adoption just went through the roof. So there's some real, I think, power from some of the demand side players that have a great focus on great user experience, have huge customer base. They can really drive change and act as a catalyst, and that can be massively powerful and for the good of all. I guess there is a risk that if you get too big a player becoming too dominant too soon, there is a risk that it could become a barrier to entry for others. And in a number of markets, as we've talked about, open banking is being driven. Well, there are a few reasons, but where it's driven by regulation, it may be around trying to drive more competition and innovation. It may be around trying to tackle societal challenges like financial inclusion. It may be around trying to create a competitive differentiation for a market by having a great digital financial services industry. But in all of those scenarios, what's really important is innovation and competition. So I think as a regulator, again, it's not a role I've played, but I would imagine it's quite a tough balance to make sure the conditions are in place so that everyone can play, yet you're also encouraging the catalysts that really drive behavior. Now, with an industry that's based around access, so open banking, as we said, if it's done well, and you've got strong standards, that should make it much more open to all. The barriers to entry are much lower. If every bank has their own proprietary standards and you have to have a contract with them and all of these sorts of things, it's far more barriers to entry. Whereas if you've got an open banking, open API ecosystem with some rules that make it clear who can play, and the barriers to entry come down because you've got standards being used well, I think it creates a great platform for innovation. I do think for the market to evolve, you need innovators to be catalysts, and sometimes that'll be the really big guys that can drive change on a massive scale. Sometimes it will be really innovative smaller businesses who just nail a particular problem statement or use case, and then that accelerates progress. And ideally, I think you want the market to support all of those things. I think it's a tough balance to get right. What I'm seeing in markets like the UK is it is driving a huge amount of innovation. All of those hundreds of companies and the APIs are being used hundreds of millions of times a month. So 410 million APIs calls a month in the UK at the moment. Tiny compared to the volumes in India, but again, it's really building. So it's showing that it is creating an environment for innovation and many new use cases. So it is creating an opportunity for innovation, but it is also creating a playground for the big guys who've got really strong set of assets to piece things together in a new way. So yeah, I won't pass comment on any specifics around WhatsApp in Brazil because I just don't know the background enough. But I think, yeah, there's a really interesting balance here and an opportunity for markets to really encourage that combination of catalysts and open innovation.
Yeah. I mean, in India also, WhatsApp Pay is supposed to get the authority to launch and start working on. So it will be interesting to see because, Brazil has so many fintechs working there, and it's basically a fintech-driven market. And India has been really, again, interesting when you talk about solving niche problems. During this COVID, we have seen, startups coming up trying to solve problems for SMEs. How you reach the money there and make sure that they get easy access to loans for every bank. Every bank's trying to use these APIs. I mean, really interesting use cases. COVID has resulted in a push for that and has come up on that.
I would agree with that completely. I mean, we've seen the same. So I guess there are probably a small number of markets that are mature enough that they created a foundation for the response to COVID. And again, in the UK, we saw a huge amount of activity there. Again, there were lots of tax schemes and investment schemes to help businesses through this, help citizens through this, and open banking became a great platform for providing the right evidence that you were eligible for these different schemes, access to lending in new ways. There was a really nice use case in the UK. It is charity fundraising. There was a World War II war veteran who was just approaching his 100th birthday, and he started doing a walk to raise money for the National Health Service. And it really captured the nation's hearts. And he started off doing this as a local fundraiser. By the end of it, I think he'd raised nearly £40 million. It was huge. It was on the news every day. It was enormous. But one of the big fundraising apps, Just Giving, actually, it was one of the first introductions of open banking payments at scale. So one of the ways you could make the donation was paying straight from your bank account using open banking payments. Now, I know this has been in place through UPI in India for a number of years, but it was a great catalyst use case, actually, and huge amounts of money was donated through open banking APIs, which means simple digital payment experience. You don't have to input card number, share any information, simple authentication, just using Touch ID or Face ID or whatever else, instant delivery of funds through the faster payments network, and a completely different set of economics to the traditional card payment. So yeah, in the COVID crisis, we saw loads of use cases, loads of companies looking at how the open banking foundations could be used to solve some of the problems around access to tax breaks, access to credit, the means to make charitable donations. It was really interesting, actually, and the speed of the innovation was also testament to, I think, the quality of the implementation by the banks in the UK. And I expect we'll see more and more of this as open banking rolls out across more markets.
Yeah, I think it's an interesting space to keep on watch at. So, when we talk about regulatory-driven market and then market participants-driven market, basically, now when we say that they both have to come together at a point, right? Which are the areas you see that there will be the major overlap or the collaborations happening? So, for example, when we say that we have to define the standards, right? One is that is security, standardization. So, if I want to see, okay, these are the three areas where both the extremes need to really come together and finalize or work together. So, what would be those areas?
Yeah, so let's talk about a couple of things. So I think you touched on a really important point there, standards. But it would be good to explore. We can talk about what are some of the commercial areas that will bring both sides together. Actually, I think in the definition of standards, this is an area where we've seen huge collaboration between the ecosystem. I mean, in the UK, so my co-founders, Chris and Freddie, led a lot of the activity to develop the standards. And it was a huge industry activity pulling together banks, various fintechs and third parties, technology platforms, consumer groups, all sorts of players to develop a strong set of standards. And we see the same happening elsewhere. So we work with Ozone API, where we see a part of our role to be really active members of standards development. So again, we're working as one of the members of FDX, and again, that's a great collaborative example between the banks and the fintechs and the technical providers to continue to further standards in line with the needs of the market. So I think standards will continue to be a great area where all sides come together for the good of the ecosystem. And at the heart of this is the security protocols that make it all work. So how do banks, third parties connect in a secure way, certain around who they're each dealing with, and then handle that consent from the customer in an intelligent, secure way, and all of the fine-grained consent that you need with more complex use cases. And again, it's groups like the OpenID Foundation that have developed a really strong set of standards there, and their membership base shows how open and diverse a group that is. So standards, I think, will continue to be an area where there's huge amounts of collaboration. In the regulatory markets, what's often happening is banks are required to implement APIs that allow access to sort of a minimum bar. Now that might not always be clear exactly where that bar is. So it's important that the standards cover all sort of future requirements and scenarios. But quite often what banks are doing is, so in UK and Europe, for example, the account information that banks provide is broadly equivalent to what you'll see in your online banking statement. Obviously, that isn't all of the information that banks hold on behalf of their customers. there's also much more functionality that banks can provide. So what's happened in many of the regulatory markets, the first implementation banks do to meet the minimum requirements of the compliance, but through doing so, they're putting in place a foundation where they can do an awful lot more. In those regulatory markets, I suspect the areas where we'll see most commercial collaboration, you can probably break them into 2, possibly 3 areas. So one definitely will be around payments. So banks and third parties working together to create better, more frictionless, more intelligent, more embedded payment experiences. So today in the UK, for example, there's a great payment experience, but it always requires you to be in session to approve a payment with strong customer authentication. And it always requires you to be redirected to the bank's app to do that. It's great, it works well for certain use cases, but for this to really scale, you need payment experiences that can be embedded in a marketplace or in a platform and things like that. You also need more functionality. So payments can work frictionlessly when the customer isn't in session, if they've given the right consent and it's got the right rule sets around it. This will be an area where there will certainly be commercial opportunity for third parties and banks to work together to build better payment experiences that have a sustainable commercial framework sitting behind them. There are real costs for banks in doing this. So it's important, I think, you get the right commercial dynamics. Another area I expect to see a lot of innovation, so that next Open Banking 2.0, the commercial layer, is around digital identity. So banks, by their nature, when they onboard customers and as they manage customers' relationships, they do an awful lot to validate that customer is who they say they are. And they continue to get and refresh evidence. We've seen how successful identity services can be with the likes of Facebook Logon. So the power of a bank-grade digital identity, whether that's simple things like proof of address or age validation that this person is over 18 if they're looking to buy alcohol, whatever it is, through to bigger, more complex use cases like a full KYC as a service or log in with my bank. There's various different flavors of how that could play out, but banks are sitting on a real opportunity here because like the big tech players, they have large customer base who typically trust them, and they have a secure means of engaging with their customer using strong customer authentication. There's a great opportunity for banks to help many onboarding and commerce use cases with all of the identity information. So I expect that will be another area. But then there's a whole bunch of other data that the banks have. They could make available more transaction insight or more credit data. But then moving beyond the scope, great APIs on top of banking services can be used in so many different places. I mentioned at the outset things like trade finance and trade flows. And again, players like DBS focusing in this space, and then massively sort of commercial opportunities to help solve big problems in moving goods around the world. Huge amounts of opportunity. So I think we'll see lots of areas of collaboration between banks and third parties. It needs to happen at the standards level, and it absolutely is. In the regulatory environments, I think it'll be built as a layer on top in areas like payments and enriched data and identity information. But then there's this whole spectrum of all of the places where bank products, payments, lending, money movement can help unlock pain points. And banks will do a better job of being embedded in those if they leverage standards-based APIs really well. And fundamentally, that's why we set up Ozone, because we believe that this will only work well and at scale and in an interoperable way if the open APIs are based around strong standards. That doesn't hinder the ability to differentiate. It actually increases the ability to differentiate, because you're using a common set of Lego blocks, but you can build whatever it is that you want. They don't all have to look the same. So yeah, we think there's some huge opportunities here for banks.
Yeah. In fact, I was reading today that I think recently there's a study done by PwC along with FICCI, Indian Federation, that looks after the commercial aspects, and they have advised the banks that to use video eKYC for mortgages. I mean, to make sure that right now, when you need to access and faster the loan approvals, and we cannot go to the bank, and that process is really slow. So they are actually authorizing video eKYC and using API functions to make it smoother and faster. And I agree, it will facilitate the development of that ecosystem in a much safer and much, I would say, very proper driven way, rather than anybody doing everything that they want to do. And at the same time, market should innovate, because regulations are it's like operation, like you blind your eyes sometimes, but innovation comes from the market and opens up. It's like horses side eyes. Sometimes you just open one side up from that side. Yeah. I mean, yeah.
You make a really good point there, though, actually. So other areas of the infrastructure and the ecosystem will need to catch up to take advantage of the opportunity. So again, sometimes that might be regulation and legislation. So if in a great digital journey, you then have to have a wet signature at somewhere in the process, that's going to hugely hinder the potential of innovation. So yeah, leveraging things like identity validation through video rather than an in-branch visit, I think will be really important. But also, I think it might stress and challenge some of the bank's internal processes in areas as well. I mean, one of the things we've seen, so lending seems to be changing a little over the years. So there's the propositions like Klarna, so buy now, pay later, easily integrated at a point of sale, driving huge amount of traction with consumers. I was talking to a major bank recently about this, and how APIs can enable you to, banks have a huge balance sheet, the ability to lend. They can put flexible financing and invoicing, flexible financing options behind a pay button, working with a payment initiation service provider, or inbuilt into an SME invoice. The API technology allows them to do that. What some of them might need to do is then upgrade the way they operate internally. So historically, there's a whole bunch of banks that only lend to existing customers where they have a long track record. Now, of course, and they've built very successfully doing that, but it's hard to embed lending into an API if it's then only accessible to a subgroup of customers that you have a long trading history with. So it might challenge some of the policies and procedures and that exist behind day-to-day banking. But again, I think that's a great opportunity, right? It forces everyone to work a bit harder to meet the needs of demanding customers.
Right. So, I think we well understand now that how the different approaches exist, right? So if in order to sum it up, and that's what my last question is also, if I to take UK and US, what will you say would be the best practice each one of them can learn from each other? So maybe US can learn something from UK can, and I'm taking these two names because these are like two extremes that at least I have seen researching on them. So and of course the others can follow with it. So.
Yeah, so it's a really good question. Now, if we take the UK, I think some of the key learnings that a lot of other markets seem to be looking at and have been using. So as we established earlier, it's a regulatory-driven market with really quite a strong drive. But out of that, I think a couple of things happened which have been really powerful and beneficial. So So one was the creation of strong set of standards that have been implemented consistently. So the UK Open Banking Standard, again, the security element of it was developed with the OpenID Foundation, and the OpenID Foundation's financial grade API is kind of the gold standard, I think, for the security protocols for open banking. But beyond that, the standards also, so it covered all of the functional standards, but also customer experience guidelines, how to ensure that unnecessary steps weren't added to the customer journey. So there's a real focus on user experience. I think that's really powerful. So there was a very strong set of standards that were created, and I think they've been a foundation for many other markets around the world. They'll evolve and they'll shape and they'll be improved, but there was a great start point which is being and has been used as a learning. I think one of the other things that was powerful, there was as a real coordinated implementation approach. So not just collaboration between the different players, but a coordinated implementation. So sort of managed rollout and testing. So banks and third parties work together to test the APIs in a controlled way before things really scaled. And there were some central services that were created that helped make the market work more effectively, a sort of central trust framework, which I think made it more efficient for both banks and third parties to participate. So there's some really good infrastructural learnings, and that I think has led to the market starting to mature more quickly. It came with some pain. So as I say, there was a strong regulatory drive. The banks were mandated to do lots of things. I don't think the market would have taken shape without that strength of regulation, the strength of drive. But I think the learnings there mean other markets can achieve something similar without always having to apply the same sort of strength. So I think there's some really good learnings around the importance of strong standards and the value of collaboration. And we've got a great foundation now that's being built on in the UK. If we look at the US, obviously this is a market that, there's a very established market. Lots of customers use services based on access to their financial information. So a market has formed very successfully on a commercial basis over a long period of time. So that shows that whether regulation's there or not, there's a commercial need for this to happen. There's value for both banks and third parties to do this. I think one of the considerations in the US now, so again, it's a huge market, hugely complex market from a regulatory perspective. So I would expect, and I'm no expert on the market, but I would expect the market to continue to shape through commercial forces rather than a big piece of regulation. The market seems to be now starting to look at the question of standards. I mentioned earlier FDX, who are doing a great job of working with the industry to develop standards. The market's still based on a lot of credential sharing, so customers share their login credentials. And I think ultimately everyone would recognize that this market becomes more robust and more performant over time if it's based around standardized APIs, because you lower the cost of entry and you improve the efficiency, but also a security model, both in terms of how banks and third parties connect, but also how consumers or users grant consent. One, I think a model where credentials do not get shared is always preferable, because obviously you introduce risk if you're sharing a username and password or something like that. But customers have much more control over their data if there's a granular consent flow. I know what I'm giving access to and why, rather than a sort of more open access. So I think there's a great opportunity for that learning and the implementation of standards-based APIs to sort of take that scale that exists with the US market and combine some of the technical advantages that were created in the UK market. So, and I think we'll see that. So again, back to the point I was making earlier, I think we'll sort of see a meet in the middle. You've got a big market with an opportunity to upgrade the infrastructure. And I'm seeing, again, with the work that players like FDX are doing, I'm seeing that start to happen. UK, we've got and again, the same market existed before, but at a much, much lower scale. I think now we've got a strong technical foundation for it to really start to flourish, and we're starting to see that. We're still at the end of the beginning, but the usage is showing that it's really growing exponentially.
Right. So basically, a serendipity of open banking. We are looking for a place. Yeah, okay.
That's a very good way of putting it. Yeah.
It's fantastic, and I think this was one of the topics which I had always in my mind, because one of the things that I've been doing is trying to understand the maturity of each market in terms of regulation and market initiatives. And I always thought, should I look at both or not, or should I look at individually? Because if I say China, US doesn't have a regulation, but I get questioned on the fact that then how are they doing well, and then you have other markets who are doing well with regulation. So I think, again, it's the convergence and where the areas, particular areas like standardization, security, which will be the core to drive open banking, is where you will see these happening.
Yeah, absolutely.
Yeah. So thank you, Huw. I think it's been a great time, and we will definitely have more sessions with you in the future. And we look forward to that. I think because you come with this perspective of UK as a market, which is really interesting to see, and I keep on tracking the market regarding the advances that are happening. Like India, this is again a separate extreme. This is again the other extreme. I mean, and the space is really mind-boggling for sure. So thank you so much for your time, and it's really a pleasure, and we hope to catch up soon again.
No, my pleasure. I really enjoyed it, Minakshi. So thank you very much for the opportunity to talk. It's great.
Thank you. Yeah. Bye-bye.